Hello, welcome back. It is Monday, April 10th, 2023, and this is your friendly host, Dave, at precisealgorithmtrading.com. Um, so Friday was a shutdown day. The markets didn't trade as far as equities and options. Futures continued to trade through the day. They gave us a little bit of a heads up, kind of what today might turn into. You can't really rely on it, but they were up a little bit, and we ended up a little bit today. So, in general, although the Nasdaq was down or pretty much break even, flat at minus 0.03%, the Russell, since it zeroed out here, I don't know what it did, except I'm sure it was up a little bit. The S&P was up 0.1%, so hardly anything, and the Dow was the winner for the day by being up 100 points, 101, 0.3%. So we'll look at the actual E-mini futures here. We can see that the overnight, the E-minis are up a little bit, and this is where we can see what the Russell did, because since it zeroed out after market. We'll flip over here real quick. As soon as it catches up, there we go. So yeah, I don't know what that is. It's pretty much the same as the previous bar. This is tomorrow's bar that's forming already, but obviously up a little bit. And we got a nice little green candle kicking in today. So we had the buy signal actually on Thursday. So we got followed through today, and an official green candle. Which, what's that mean? You can get green candles, and they can get faded as well, just like they did here a week or so ago. Obviously, you can get green candles. This was in the way of an uptrend, and then that was actually would have been a great place where the crosshairs are here to have gotten out of that long trade to the upside. Even though, yeah, did it come back and was it green again for a little bit? Sure it was, but it's also starting to put in a lower high at that point, which doesn't really get confirmed until this big candle on the 21st. So, and that's really how you look at this, guys. You can't just rely on a green candle, because I don't have that dialed in as perfectly as I'd like, but maybe someday. Anyways, a green candle, generally speaking, is a pretty good indication of, at least short term, getting a potential new trend going. You can't get a real new trend without green candles forming, and same way for the red candles to the downside. All right, and then so we went through the major markets. Let's look at USO here. Oil, it's spiked, obviously. It's in a long-term downtrend. If you look at the weekly chart, it's obviously down, although this could be the beginning of a new bullish trend to the upside. I just really expect it to pull back to these trend lines before it can really go higher. These trend lines are in the neighborhood of 67 to 65, which is actually pretty close to these trend lines. So we'll see if I get my way, but obviously it's a dangerous move. I'm short this market. It's a dangerous move to go against, but I'm only doing it for a little bit of potential gain, and unless it fails at those levels, and then if we could go all the way back down to 57, and that would be a heck of a trade. All right, so that's that. Bonds were down a little bit today, although green bars on both time frames, so they just took a breather, really, and we'll see what happens there. And that's good enough for the overall market. Let's look at the internals of the market. Bullish. We type in bullish in stockcharts.com, and it brings up the bullish percent indexes. It's pretty handy because it puts them all right up front. There's other things with bullish in them when you get into the second page of this stuff, but we're here looking for really that. So let's go ahead and, for fun, look at the industrials that didn't move at all. The NYA, it's up by 0.3% today, which is not very much. The transports didn't move at all, although if you look back at that, let's just pop over here. The transports here actually moved by 1.66%. So this is a new buy signal on the daily and not quite on the weekly, but and so we got a sell signal on the weekly on the TrueMomo indicator, but this would be a place where you could get long if you wanted to, and I would just suggest putting stops underneath this price action in case it just totally gets reversed, because like our red trail scan indicator here actually is all bearish on the daily, so you're totally going against the, I'll call that the really pretty short-term trend, but that's what you have to do. You got to go against it to break it, or you got to wait for it to break, and then you'll get a pullback. So I am actually going to put in, it's IYT. I think I'm already in this position, but it might be worth an add if we get a little bit of a pullback tomorrow. Come on, cooperate with me, software. Great alert. At or below, and I'll get an alert, and then I can check it out and see if I want to buy there. All right, back to this. So that was the NYSE, that was the transports, the NASDAQ up by 0.23% today. It's got a ways to go to get a point and figure buy signal. The SPX, just because in order of like big markets, up by 0.37% today. And then the NDX, I already know this, it fell today and created a new column of O's, which is, it's still in a point and figure buy signal because the previous the recent column of X's exceeded the previous column of X's to the upside, and you can actually see we've got 3 columns of X's to the upside that, but in that whole point and figure buy signal. These O's would have to come all the way down and get below 52 in order to put in a new O and make it a point and figure sell signal. That's completely possible. I don't expect it, but it's completely possible. And by the way, this one lost 3.17% today. So the NASDAQ 100, the big NASDAQ tickers, are going to struggle going higher for a short period of time here at least, because this is a new column of O's. It'll have to get up and going it would have to be something seriously reversing to the upside, some great news or something to get this thing to turn around immediately. And so I'm expecting that to be a laggard for a week or so. And then the OEX, it's flat today. So the majority of things were up just a fraction, and the NDX is the laggard. It's the one that's given us the most trouble, and oh well. So you just got to know where you're at in your trends, and watch your risk. That's really what it boils down to. And then our automatic trading systems, the ones on our website that trade automatically. This is the Russell 2000. This is the quarterly contract, the actual contract that you trade, and it's been, irritating me for a week or two now. But in the long term, this is 6 months of it. It's been irritating me for a month or so, and that's okay. We'll live through it, but it's just a pain, because when you see what the NASDAQ is doing, this one, it's been irritating through this period of time when it was going down, and now it's starting to pick up again. And this is kind of what we look for. So these trades, this is literally your equity, or my equity, that's building or declining inside these things daily, or with each trade really. And what we need to do is start breaking these these old highs for our equity, and printing new green dots. Those are equity peaks, and when you get a bunch of them together, then you got a nice uptrend. This is the 6 months data of the NASDAQ futures, and you can see it looks really pretty good here. You can see these things happen quite a bit, like all that drawdown area there. It lasts probably a month or two. You know, these things happen. So the way that these things are, the markets are sometimes just random, and you got to deal with that. But in the middle of randomness, you get trends. And we can take, what's nice about this indicator, or these trading systems, is they go short and long. I mean, on any given day, if the market's big and bullish, these trade systems can be down, or if the market's, you know, big and bullish, they can be up, and vice versa. If the market's big and down, these things can be big winners. And a lot of times, that's what these things need, is they need a lot of volatility. So this is the Dow. This is the quarterly contract, and it's healed a little bit, and now it's pulled back for a few days. And this is what it looks like on the quarterly, or on the 6 month contract, or 6 month time frame. So really, it's not too far off of its highs as well. So back here at these green dots. So that is all I've got for you tonight. Hope everybody has a great week, and take care, guys.